So the watch list is just when I run through like all the stocks I got laid out, mark them up, see what's setting up for the next week or so. And then like that's what I put out like on the Instagram, pick videos I do. And I'll drop like the screenshots in the chat, or I'll just put a video together and drop that in the chat. But that's it for the technical analysis. And then, the profit calendar, that's his own separate thing.
Right.
What's up, everybody? Everybody's shy. That's cool. Cool. You already seen what you looking at, Julian, for tomorrow? Or you just wait? You wait.
I gotta go make my list when I'm getting the house, coming from my anniversary date. So.
Congrats, bro.
But I tell you what.
Hi, Jay. We're here.
So.
Because you said we were quiet, so we're letting you talk. Like, go on.
We are cool here. Nobody in here is crazy, as far as I know. Nobody's crazy. Speak for myself. Let me just say that.
Well.
I better look at it go.
We gotta look and see who's here first.
A little crazy.
True enough. Yeah, I'm gonna drop that list in the group. I'm probably just gonna do, like I said, a video, just kind of talking through it. But that's it. Like I say all the time, like I just open up the Zooms if there's any questions, any misunderstandings, anything that needs to get cleared up or addressed. Tighten some loose ends so we can roll into the week on a good note.
A question. Why don't you like to do to make plays on stocks that have earnings that week? Because there's a certain Kroger company that has earnings coming up on Friday.
So
oh my God.
What's up, Lauren? So before I actually would trade earnings, I would actually day trade off the earnings reaction based on, the way the stock moved after. Because of course there's going to be more volatility leading up to earnings, and especially on earnings day or the next day. But just after trying to play before earnings, I just got tired of losing, especially when I would be right in regard to whether the company would perform well or not. Like, the company would lose money or they'll be down on earnings, and I bought puts, but then the company would go up, or the company would crush earnings and I had calls and the company's stock would drop. So I stopped playing prior to earnings, but I played after earnings, but it's just extra. It really comes down to just finding a system that works or a strategy that works and trying to just focus in on that instead of trying to do earnings and day trade and swing trade and momentum and the meme stocks and, just trying to stick to something structured.
So I'm hearing you say we're not buying Kroger this week.
I'm not. You do what you want.
You are not hearing. You're not hearing him say that.
I'm not buying it. I'm still mad about this week.
Don't let this week carry over into next week.
It's not. But if it's earnings, I'm not playing earnings because every time I play earnings, just everything I think is going to happen doesn't happen.
You sound like you've been hurt. You sound like you've been hurt,
and I've been hurt. You've seen me get hurt. I'm not doing. I'm glad you told us that Kroger's earnings is this week because I was going to start researching after the call.
I just looked it up. I just saw that it's Friday.
Hey.
Well,
do what you want to do.
I'm not doing it. That's why I'm not doing it.
There's always another play out there.
False. There is no other play. There is only one play.
What else? Delta? You got Delta? I don't think their earnings coming up. I haven't looked.
I'm gonna look up Walgreens, and then I'm also gonna look on the profit calendar. But I was gonna do that after we hung up.
Like just off rip, it's a lot of energy plays on the profit calendar right now.
Bet.
So that might just be a whole sector to pay some attention to. A lot of energy stocks.
Oh, okay.
Jordan, I would like to ask, what are the easiest or best indicators to read the charts with?
So I'll answer that question exactly how you asked it. But first I want to say to make indicators secondary. So price action, right, what the actual stock is doing is first and foremost. Indicators are only typically, right, like your RSIs and everything, that's only going to be based off of the actual price. So first and foremost, make sure you focus on the trend, right? If you're going to buy a stock, try to buy a stock that's moving up, overall. You want to go with the current, right, not against it. So focus on trend. Identify your levels of support and resistance, or if you're doing trend lines, right, get that established first. And then once you see a stock that's in an uptrend and it's at a support level, and then you look at some indicators and the indicators show that it might be a buy signal, right, then that adds a little extra to it. But to answer your question, I think the easiest one to utilize would be the RSI, because the RSI is going to show you, if the stock is overbought or oversold, right? So when it's a lower RSI, that's when you can start looking for a potential reversal to the upside, and vice versa. When it's a higher RSI reading, that's when you can look for a potential drop. But it's why I put the whole thing before it. The indicators aren't be all like end all type of things. RSI, I've seen all the time where the RSI could be above 80 for a week, 2 weeks, and people bought puts just because the RSI was up. The stock just kept going up. So the RSI, the MACD, and then Bollinger Bands, because Bollinger Bands help give you a range of what that stock might be looking like. Or bouncing in.
Okay, thank you. Another question. What time frame do you usually check for trends? Is it the weekly or the daily? And what time frame do you usually enter?
So I usually will look at the daily chart for my overall trend, just because and this is a question, like, so for me, like I said before, like a lot of things will vary based on how you trade, right? So for me, I'm usually looking at the daily, and then I might enter off of the 1 hour, maybe. But typically, because if I'm swing trading, I'm like looking for like a 2 to 3 week hold, then I might just look up the daily and enter off the daily. But a lot of times I'll trend and get everything established on the daily, enter off the hourly. But just to kind of flip it, Julian, I think he's still in here, but he day trades. So for him, he might not look at the daily chart at all, because he's only going to be in a trade for maybe 30 to an hour, right? 30 minutes to an hour or whatever. So he doesn't really, he might not, in my opinion, right? But he might not look at the whole trend because he's only trading it for one day, right? So it depends on how you're going about it.
Okay. Hi, Julian. Are you there? Hi. I wanted to ask you the same question as a day trader. Yeah, I can hear you now. So I understand Jordan usually swings. So, and he said you were a day trader. So I wanted to ask you, what time frame do you usually enter for a trade as a day trader? And also, what time frame do you usually watch out for when it comes to trends?
So when I'm looking at as a trader, I'm looking as soon as the market opens. Market opens about 9:30. I make my list the night beforehand, and I always. So I always want to see what's moving, and I always, depending on what charts we take our access in. Okay, cool. Depending on what's moving at the time, I set my support resisting lines. And I'm usually shorting stocks. So right now it's mainly paper. I haven't really done a lot of live trades due to I want to pay my student loans back first. So it's more so as practice makes perfect for me. I have a decent win percentage, about 70%.
Okay.
I see.
All right, makes sense.
Question.
Thank
Your
you.
name pronounced Taiwo?
Yeah, Taiwo. I'm actually known as Elizabeth on Discord.
Okay. Okay. What do you go by?
Taiwo is my cultural native name, and which has to be pronounced with an accent because it's Nigerian. But I usually go by Elizabeth for the Americans.
Okay.
Oh, wow.
All right. I'll probably end up forgetting to call you Elizabeth, and I'll just keep saying Taiwo, and then I'll be like, oh, it's supposed to be Elizabeth. So I saw David's question. He asked about LH. That's the ticker symbol. He's looking at doing spreads on the profit count. And I think that's not a bad idea, my guy. I see David. I'm pretty sure you can hear. It's on a pretty good support level right now, around 260. So it looks like it can pop back up. 279. A spread would be very low risk. I mean, that's a solid trade. It looks pretty decent, especially if you get a move above Friday or Thursday's high. Can we talk about Clover Health, the mean dream? Exactly what you was thinking, David. Looking to get in after confirmation at 160. That's what's up. Exactly, bro. Don't just enter just immediately. That's how I don't play it like that. I like to wait to make sure a move is happening. Everybody can feel free to chime in on Clover. It had that quick run up. I think it was like a 2 or 3 day burst. And then it started dropping back down. So as far as my thoughts, just like all the other meme stocks, they get pumped and then they dump. Like that's it, right? A big run up, a bunch of hype, a lot of people make money the first 2-3 days, and then a huge drop off, and a lot of people are sitting there bag holding because they thought it was going to the moon or they thought it was going to 100. And now, if I'm actually looking at it on my computer, but when Clover hit a peak of 28.85, and from where it ended on Friday, it dropped 47%. So a lot of people probably lost half of their money in about 2 or 3 days. Calls got the bomb. So
can I chime in?
Go ahead, bro. Go for it.
This is just my opinion. A lot of people, like you said, you end up holding that bag to the end. Hey, if you're making a profit, don't be afraid to cut it. If it keeps going up, it's okay. You still made your profit at the end of the day. Whether it be a $10 profit or $100 profit, just keep applying that same strategy, and you'll see overall more wins. And as your wallet increases, you'll be able to do bigger sizes. Just stick to the same strategy, and you'll always win it.
Yep, nobody went broke taking profits. People go broke.
I tell you.
Can I? So I was reading about it on Reddit and online, and they were saying that it was the shareholders can't sell their shares until it reached $30. So they said it was going to be a short squeeze because they're trying to pump it to get to $30. So I was like, well, would it be a good time to do like some short calls on it to make money and then just make sure I'm out before they dump? Like, what are your thoughts on that?
The thing is, and this goes for everything, you have to keep in mind like the fact that while regardless of like your experience level, what you're reading on the internet is literally that. It's just something you're reading on the internet. So, I've been trading for 9 years now. Somebody else might be trading for 13 years. They might be saying, yeah, buy it because it's going back to 30. And I would be like, yo, I probably wouldn't fool with it at all. Julian, somebody just put a question for you in the chat. I know you're driving. I think they have the platform.
Yeah, you have to read it to me.
All right, hold on 1 second. I got you. So the thing is, like, it actually up almost 230, then it dropped right off. So I would say just be careful about whether you play it at all. Keep in mind with the options that, implied volatility plays a huge part in it. Of course, your timing plays a huge part in it. And it might just move sideways for a minute. If you look back at what AMC and GameStop did after those run-ups back in around like January, February, like after AMC dropped back down to, basically regular numbers, it just moved sideways. And so if you were buying options then, you would have just been getting eaten up, right? So just I just recommend for the safest thing is to, of course, leave them alone, because it's just crazy how they move. But I would say just be careful about what somebody might put, because me, for example, having 30,000 followers on Instagram or whatever, if I said, hey, go buy this stock, or maybe if I had 1 million, right, and people were buying the stock, I'm pumping it up myself, right? And then I could just be letting them pump it up. They're like, oh yeah, Jordan Martin said buy it, I'm gonna buy it. Jordan Martin said buy it. I'm pumping it up. I pull out, and then whatever happens, happens. So just be careful with, what analysts say, what random people on Reddit say, because it may well happen, but by the same token, it might not. But I say play it safe regardless. Julian, they asked, what platform do you use for paper trading?
Two main platforms. One would be TD Ameritrade Thinkorswim. It's a really, really great platform. And then you can also use Webull, because when I'm not in the office, I use their paper trading platform. Although I'm not as familiar because I've only done it about 3 times with Webull. But TD Ameritrade even lets you rewind and practice past plays. So I would just look at what's trading and see what you could short for that time frame.
Yeah.
Now, I'm not too good with long, so anything that involves the stock going up, I have no clue because I don't look for it.
Good answer. That's the same thing I would have said. That's the only two, or most common two I know of. I know there's a lot of them out there, but those are the most well-known ones I know.
Yeah, those are the two I thought too. But I just wanted to see if I could talk to someone with actual experience. That's just the internet,
So what's paper trading? Paper trading is like a demo. It's where you're not actually putting your money out there. You're just trading with fake money in a fake account. But, of course, you're trying to mimic what you would actually do. So it's really good for strategies down. The only downside to paper trading, it's not too many downsides because it's really just like practice. It's like if you play basketball and you're going in the gym, getting shots up or working on dribbling, it's good practice. The only thing is a lot of people get messed up when they start making a lot of money on their paper trade account. But then when they go on their live account, they don't have any true risk management developed or any true discipline, because with paper trading, you're just playing around with fake money. With your real money, it hit different when you down $100. You're like, oh crap, oh my God, I gotta get out. With paper trading, you can be down 100, down 1,000, and be like, yeah, it'll go back up. Who cares? Right? And then you be like, oh, I made $2,000. I'm the best trader in the world. I've seen that happen tons of times. But definitely practice though, definitely.
So I guess the only other downside of the paper trading side is if you're actually trying to do it in time with the market, it is usually 15 minutes to 20 minutes behind. And he's right. You have to control your emotions no matter what type of trading you're doing, whether it be day trading, option trading. If you get too greedy, you get too nervous, this ain't for you. You want to stay in calm and stay calm in front of your money, because if you can't control 100, you can't control 10,000 at the end of the day.
Exactly, bro. I say that at least 3 times a day. People be like, "Oh, I need more money in my account. That's why I'm not making money." Oh, feel what you have. Promise you.
Easy way to remember: pigs get fed, hungry hogs get slaughtered. Get too greedy, you'll get cut.
That's right.
The greed is so real though, because like last week I was up like $300 on one of my stocks, and I, instead of taking profits, I was just like, well, I'm gonna just see if it keep going up, and it actually went down and I lost $100, so I was only able to profit 2, but I could have profited 3 if I wasn't being greedy. So the greed is definitely like super real.
Yeah, one thing.
Well, you know what they say, hindsight is 20/20. My bad.
You good, bro. No, that's good. That's a good point. Was that it? Was that it? Go ahead. You were already talking, bro. Go for it.
Oh, that's
We
all
have 3 more minutes.
That's a quick joke. That's it. That's all you, Drew.
Oh yeah, that's it though. Like it happens all the time, and like one of the things that helped me with that was having somebody keep me accountable with my trading. So like I get out. So there's a couple of things I'll just run through them. One is after you get out of a trade, like just not looking back at the stock at all, right? Like once you make that trade, you make the trade, you close the trade, like you're done. Don't go back and see, oh, I could have made more, or oh, I'm glad I got out right in time. Unless you're actively looking for a new position, but you already know what the stock was doing when you got out. And if that stock was something to get back in, you wouldn't have closed in the first place. So don't revisit the past trade, right? Move on. Whether it was a win or a loss, move on. Every trade's a new trade. Prior to getting in a trade, have a plan, right? So if it's a trade based on technical analysis, right? You marking up the charts and you're like, okay, this stock usually bounces between 50 and 55. So I'm gonna ride the wave up to 55 or even 54, trying to get out a little bit early just to lock it in. Then do that, right? If the trade goes down and you have a stop loss in mind, say, okay, I'm gonna ride it from 55 to 54. But if it goes down to 48, I'm gonna get out, because it might keep dropping. Like you need to have that established in your head before you get in a trade. Otherwise, you're like, man, it's at 53, 54. Should I get out? I don't know. I'm up a couple hundred. I don't know. I'm gonna just stay in. Okay, dang, now I lost $100. Should I stop? I don't know. Right? Like you start messing around with your head because you don't know there's no plan, right? When you get in the car, you got a plan on what you're doing. You like, okay, I'm about to drive to the store. This is the way I'm going. Okay, I'm gonna pick up this stuff. Then I'm gonna come back. Plan. Otherwise, you just be driving in circles, wasting gas, which sometimes we can do. But right, like you want to have an approach for every trade you're taking, whether it's off the profit calendar, whether it's a day trade, a swing trade, a long term, because of course there is a spot where you're going to get out the trade, right? There's a point where if you're up, say you put in $10 and somehow you're up 1,000, right? Like you might get out because you're up 1,000. If you get out, you're up 900, 800, 700, 600. By the same token, if you put in $1,000, I'd hate to say, most people will do it, but there has to be a point before you just let it go down to zero. Don't let your $1,000 go 900, 800, 700, 600, 500. Cut the loss, move on, and now you still have money to make another trade the next day. Or cut the win, move on, and then make a new trade the next day or the same day, whatever. But have a plan, have a structure, and stick to it.
Is yours like 30% plus or minus on an options trade?
So sometimes that's what I'll do on a day trade, is I like to cut day trades at maybe 20. Swing trade, it depends on why I'm entering. So if I'm entering off of technical analysis, just like the price action, right? Then I might say, okay, like I said before, if it bounces between 50 and 55, I might hop in at 51 because I see it's actually moving up. And then I might get out at 54. So I'm not just trying to squeeze out that last dollar. Because when you look at it, every time the stock moves, your risk to reward ratio changes, right? So if we're looking back at that 55, I mean, that 50 to 55, say you get in at 50 and say, you know, if it drops below 50, you're getting out. So say you get in at like 50 and 1 cent. But if it goes below 50, you out, right? If that was the case, right? If it goes up to 54, now you stand to either make a dollar or lose 4 if it goes back down to 50. Right? You already made 4, you risking $4 to make 1 more. Whereas if you got in when you were at 50, you stood to make $5 or lose 0. Right? So think about that too. It's like, is it worth me holding on to all I got right now, trying to just grab a little bit more, grab a little bit more, grab a little bit more, you know, to the point where you can't hold anymore and then you fool around and drop everything. Like, you don't want that. I'd rather walk away with my $10, my $100, whatever, than to walk away up 100 and then I'll only walk away with 50 because I was trying to hold on and see if I can maybe get 2, 3, 4, 5.
So when you analyze do you analyze the Greeks when deciding your option trades? Like how far out to buy it?
No, I really don't. Sometimes I would, very rarely, because I started a while, like maybe a year or 2 ago, I started digging into different strategies based on Greeks. Like I was
right.
back testing, you know, if you buy a 70 delta call and a 30 delta and you did this and that and the stock was at this, like I'd be diving deep into it. But for me, man, it really just got to a point where I was like, you know, I'm just gonna get enough time to make sure that I have enough time. If I think the stock's gonna make a move in 1 week, I'm gonna grab 2 weeks of time on it, and I might just close it early. So gotcha. I don't look at the actual numbers, but I keep the different factors in mind. Right, I don't go 5 strikes out the money. I might go only 1 or 2.
Got you. I was looking at when I was trading sideways, and when I mentioned it to someone else, they was like, "Well, make sure you watch data because you know it will decay over time." I'm like, it wouldn't matter, and I ended up being right, so I was kind of hurt. But you know how that go. When you don't play it, you're right. When you do play it, you're wrong.
Yeah, the numbers always change, bro. It's kind of like I see Greeks kind of like indicators. Like just when you're trying to like look at all the numbers, like I don't really care for that much more than delta. And I mean, it's once you understand what the Greeks mean, for me, I care less about the individual numbers. Oh, well, this theta is 0.09, but this theta is 0.1. Forget all that. Okay, I think the stock's gonna go up to about $54. I'm gonna grab me a 53.50 call. I think it's gonna make this move in the next week. Let me grab an extra week of time on it. So I cover my theta by grabbing an extra week. I cover my delta by, you know, grabbing a certain call or certain strike. Cool. I'm not caught up in 30 delta versus a 35 delta versus a 40 delta.
Right.
But that's me though. That's me. You know, other people trade based off of just Greeks, and they do a bunch of numbers, crunch a bunch of numbers, and if you get a 30 strike or a 30 this theta and you sell this spread with the I don't worry about all that. I used to be into all the complicated stuff and all the extras.
Right.
Yeah, nah, man. I said I don't got time for all that no more.
I don't blame you. It's just something I looked into recently, and I was like, does it really matter? Because again, options, that's a new field for me. And with my new job, I don't have as much room to day trade because I got nosy ass coworkers versus my last job. So options is gonna have to be my way for. Plus, ain't nothing wrong with learning something new.
Right. Hi, Julian. I wanted to ask, what platform do you use to paper trade?
So TD Ameritrade has a platform called Thinkorswim. That's really great. And then Webull also gives an option for paper trading, which is also really good. Webull can seem kind of like overwhelming when you first use it, but as you practice with it, the concept stays the same. So no matter what platform you use, as long as you know how to read the chart you're looking for, then you'll be good to go.
Okay, thank you. Jordan.
Yes.
So I just hold on, please.
Okay. So David put in that your thoughts on margin for trading options, especially with the collateral holds for certain strategies like iron condors. Thoughts on iron condors. So when it comes to margin, we actually talked about this. I think it was on yesterday's Zoom. I think it's fine in a sense if you're doing a strategy like that. You know, when you're using it as for collateral, like if that's what it's being used as. For those, sometimes you'll need it for certain types of spreads other than the iron condors, right? So I can see that, or kind of vouch for that in a sense. My thing when it comes to margin is I really don't recommend using margin if you're just using it as extra like money in your account to place extra trades. Especially with the volatility that comes with it, unless you are like sticking to a tried and true set of rules with discipline and structure, and you know, and you track it and everything, and you're seeing consistent success with it. Like all of that needs to be in place, because margin a lot of times can be looked at as like, oh, I just got an extra $2,000. Let me just see what happens, you know, and then you get hit with a margin call, and then you lose all the money in your account, and you know, right? Like, so that's my thought on that. And then iron condors, my thoughts on those: work it where it can work. Right? It doesn't work everywhere. A lot of stocks probably can't do it. I know it was one lady, and I want to say she did reverse iron condors, and she was like only trading SPX, and she like made like billions, but it was like a lot of small games, But the way she played it, you know, she would play the legs differently if she needed to. For anybody who's confused about what the heck an iron condor is, it's basically a strategy where you're buying different options. So you're buying calls and puts and selling calls and puts. But you're basically saying you want to make money as long as the stock stays between these two numbers.
So it's a spread.
Right, yeah, it's a spread. It's actually two spreads. It's a put spread and a call spread.
Oh, so you're buying multiple both.
Yeah. So it's just buying a bunch of puts and a bunch of calls in a certain way that allows you to profit as long as the stock stays between, say, $50 and $52, right? For an example. So thanks, baby. There's a way you can start doing that. But if it goes out of that range, then you lose, right? So that's where the kind of other part of it comes into play, is if you thought you buy an iron condor and then the stock shoots up, you lose that money. Or if it drops down, you lose that money. So it's just a play on the volatility or lack thereof.
So it's perfect for stocks that trade sideways.
Yes, exactly. If you think there's going to be low volatility, then that's exactly what you will want to do on it.
Hey, Jordan, I have a question. I'm like completely new to like the whole stocks and everything. I literally just made my Webull account like 15 minutes ago. And I want to know what's the best website to find the stocks, like for swing trading, that is.
MIGcourses.com, sir. No, so when you're looking for stocks to swing trade, So I use TradingView to do my markups for my charts. I'm looking at the chat real quick. That sounds like, yeah, I'm gonna post a recording, David. You definitely want to have a stock that's higher in price when you're doing iron condors. I'm gonna post the Zoom recording in the chat as well. Probably like upload it to YouTube and post the YouTube link. But so to answer your question, what I do is I have a whole list on TradingView of stocks that have weekly options, like a list that I manually made. So you can just Google, like I Googled stocks with weekly options, and then I hand typed in like all, however many of them it was. Some of them don't do weeklies anymore. I think some of them aren't listed anymore, but I have a whole list, and I go through and I pick out, which ones, just based on what I see, look like they might be in good position to make a move. So when I do my watch list video, I'll post that in the group as well. I'm just gonna do a recording with different stocks I'm looking at based on technical analysis. So with your swing trading, there's different ways though. What you'll see is everybody has different strategies. People have different ways they find stocks. It's just tons of different things, right? So you can trade just off of technical analysis, support, resistance, trend, candlesticks, indicators. You can trade with seasonality, which is the profit calendar. Certain stocks perform well during certain months. Like, summertime airlines are doing well, I'm not saying that for sure, but typically airlines get more activity. Christmas time, Apple, Amazon, right? Like they're gonna get a lot of business, so they might do better. So you can trade like that. And then you can also just trade based off of volume and momentum. You see a stock like Apple or Home Depot that is starting to make a move, right? You might just hop in and ride the wave. So it's going to come down to what you start to feel comfortable with. And my suggestion, if you want to call it that, would be to just try out different things and see what works best for you. You might not like the idea of looking at stock charts and plotting graphs and lines on them and connecting the dots. You might not like that, right? You might feel it's more simple to just look at the profit calendar, right? You can see the free version on my website, but I just looking at the profit calendar and going off of that, because it's just based on what the stocks have done in the past. You might not like that. And you might be like, that's what they did 15 years in a row. That doesn't mean that's what they're going to do this year. I'd rather look at what happened the last 6 months and use my technical analysis to make a trade. Or you might find it better to be just looking at stocks that are making moves and start trading that. You might even try to swing trade earnings, right? Say a stock like Apple that is a solid company misses on earnings and the stock drops. Some people, and I actually know a couple people who do it where they'll just buy the stock if it goes down off of earnings, because they're like, okay, I know Apple's going to go back up. It just dropped, but earnings are, a one-time thing, and then the next quarter, there'll be new earnings. And I think the stock will go back up. So figure out which one works for you. Try out a couple of different things. If you haven't already, grab my free beginners course. The link's in my bio on Instagram for that. I would say definitely go to that, or just go on my website and grab that. It's in the Discord too. But that and there is where I break a lot of these same concepts down, talking about swing trading, day trading, options trading, long-term investing, passive income investing, habits of successful traders, habits of traders who end up losing a lot of money. Answering a lot of common questions, because I'm having these types of conversations pretty much 5-6 hours a day. I'm sitting here talking to people about stocks. And don't be discouraged, bro. That's another thing I'm just adding in, just because you said you're newer, is a lot of times it can seem overwhelming. There's a lot of stocks, there's a lot of numbers, there's a lot of people saying, buy this, don't buy this, buy that, sell that, do this, jump up and down, spin in a circle. It's a lot of stuff. You're going to win, you're going to lose. But if you stick with it, bro, if you stick with it, if you seek the help, if you seek education, and to gain knowledge and understanding, if you start developing discipline and you start managing your trades, not just buying random stuff, but actually, looking at it and saying, I think stock X will do X because of X. And then you start implementing that, you'll start to find patterns of success within yourself. You start to see what strategies work. Like I said, you might find the profit calendar trading off of seasonality works good for you, or it might not. trading off of technical analysis might work well for you, or it might not. Trading off of momentum might work well for you. It might not. I know people who are, I'm pretty much going to say, successful traders. Like, they win the majority of their trades. They make money, all doing those individual things. I know a guy who wins 80% of his trades. Like, I saw his trades like tracked, and he doesn't even look at charts. He just, what does he do? He doesn't look at the charts, but he does something where he finds out like how, I think he just looks at whatever has the most volume that day. Like, whatever stock is moving up that day, you'll just find that and buy it and then sell it like a week later. So it's stuff like that, bro. You'll figure it all out as you develop.
So he makes money off the top gainers off of doing longs?
Yeah.
That's crazy.
Yeah.
I do the opposite. I make money off of top gainers, but shorten them.
Man, I mean, that's not like just, his strategy is probably a lot deeper than that, but that's like,
that's what I was doing, and like I was winning. So I'm not saying it's like, oh, it works for everybody, but I was just looking at like the volume, and I was doing options that way, and I was like winning. And I was like, oh my God, this is amazing. But I know that it won't work like that for everybody. And I just kind of wanted to educate myself more. But I was just using the volume and then doing my options.
Yeah, different strokes for different folks. You know, Julian make money when he shorts them. But I mean, you might catch them before they meet that peak, and you might get out. And that's when Julian gets in to buy his shorts, you know, open his short positions. Right. So it's just different ways. And then, you know, you might throw in a couple of other things. Like, I don't trade stocks that don't cost at least like $20, $30. Some people do. Oh, like, I don't.
Anything below 30.
That's you?
Mm-hmm.
Yeah, I don't.
Easy.
Don't. You know, so that eliminates some of the top gainers right there.
Depending on the situation.
Yeah, right.
But you'd be surprised how many's out there. My list could go anywhere from 5 to 15 companies a day.
Definitely, bro. Whew. What other questions are out there? What's going on? Or just say what's up. Even if you don't have a question, pop in there and be like, what's up?
Covered calls. How do you feel about those? That strategy?
It works. I feel about it the same way I feel about almost everything else. Is if you can work it, work it. You know, I started looking into it because, you know, I started seeing, like, I was reading stuff about, you know, like, use this strategy to make passive income through the market, but it's not dividend. You know what I'm saying? Like, if you can work it, work it. For me, I was like, no, this isn't really for me. Especially if I don't have the shares.
Right.
You gotta have the shares anyway. So I wasn't at the point where I had, like, you know, 100 shares of Nike stock to do it with. So for me, it really just didn't have the appeal. So I just kind of dropped it. I just dropped the whole idea of doing it.
Copy. I was looking at it as I was building more positions for my dividend portfolio. I thought about picking that up as a strategy.
Yeah, bro, test it out, right? It might be a way for you to go ahead and keep on building on. As long as you don't lose your shares.
I mean, but if you make a profit, would it matter? Because dividend investors, we hold for the long term anyway. So just paying the taxes on is going to be the pain in the butt.
That's what I'm saying, bro. That too. But man, this was a good one. We got more people on, chopping it up, answering questions, providing value, changing lives.
Personally, if you're a new trader, honestly, like looking at ETFs is a great way to go because it manage the portfolio for you. Takes a whole bunch of stocks, put them together, and whatever's not performing well, they get out of it. It's almost like a safety net.
Can you come again, Julian?
Oh, my bad. Sorry, I'm walking. ETFs, like to me, that's one of a great way to like manage my portfolio. It's kind of like my safety net. I always put into an ETF that's managed worth or $100 worth, whatever the case may be, and just that compound. And as it goes up over time, this is for people that are like new. So if you're looking at a certain sector, like an energy sector, Vanguard, for example, will have an ETF of all the energy stocks of the top performers, and whatever's not doing well, they get rid of that position inside that ETF. Replace with another stock that's doing well. Switch sides of
it. Thank you.
Not a problem. Sorry if I explained that badly.
What else we got? Awesome. Talk to you later, Whitney. Well, I'm glad, even if it sounds like Kobe was about to start hopping off. I know Lauren said she was leaving. But yeah, this is good. Like this is exactly what I was aiming for. You know, with these Zoom calls, is to be able to, you know, one, of course, like kind of get familiar with each other, but also be able to help each other become more knowledgeable, you know, and start becoming more successful with what we're doing. So my dad Julian up through the camera.
Big dog.
There we go. So
where can we revisit this recording again?
When am I going to do it?
You mentioned this is a recording, so I was asking where and when can we revisit it?
So after I can end the recording anytime, or I could just end the call. But after I end the recording, it'll send the video and all the audio to my Zoom account. That might take like 20 minutes, 15 minutes. What I'm gonna do is I'm gonna put it on YouTube, and then I'm just gonna shoot the link out to the group.
Okay, cool.
Yep.
All right, I'm out. Thank you so much for this. This was very insightful.
See ya.
Bye.
All right. Anybody else got anything they want to say? Checking the chat real quick. Boom, boom. All right. That's all. I'm gonna go eat some dinner. Hope y'all have a good rest.
Y'all enjoy your night.
Exactly. All right, y'all.
You too.
Enjoy your nights.
Thank you.